Good evening, everyone. Thank you very much for having us. Thrilled to be here, and thank you all for joining us. Over the next 4 or 5 minutes, I'll be short. I thought I'd give you a little bit of a rundown on the Sydney residential market, and then give a summary of a specific investment opportunity we have, and then close with a bit of information on legacy property. The reason why I'd like to speak a little bit about the residential market is that from our conversations with investors like yourselves over the years, one of the biggest reasons why conversations like these are helpful is that for a lot of people, they're actually thinking about what sort of the market to be in. Should I be in commercial? Should I buy and hold? Should I be in development? Should I be in securities or other evolving opportunities? So for us, it's important to communicate why we think there are strong fundamentals in the residential market and why we think it offers outsized returns to some of the other opportunities you may find. The Sydney residential market has performed well and has continued to perform well. Now, for many of you, you may think, well, that runs a little bit counter to what I might read or when I look at my own house. Now, it's probably safe to say that for most of you, you live in a house that's probably worth more than, say, $1.5 million. I think in a sense, like they talk about the two-speed economy, there is a lot of times a bit of a difference in the market for residential, in that for a lot of people who are wealthy, their homes have not appreciated much in recent history, and that's largely due to the GFC. But for a lot of Australian housing, people do need a house and are more in, say, the apartment market, looking at homes for 400,000, 500,000, 600,000, and 2 bedrooms a little bit above that. And so you can really see that there would be a little bit of a difference in the lower end sort of the market versus the higher end. Now, part of what's affecting that significantly is the population. As you can see here, sorry, the screen's a little bit small for this graph, but as you can see here, the Sydney residential the Sydney residential market is greatly affected by the population increase. Essentially, the Sydney population grows at about 85 to 95,000 people per year. So that over the last 10 years, as you can see there, it's grown by about, since 2001, it's grown by about 500,000 people. Now, over the next 20 years, it's meant to go from 4.6 million to 5.6 million people. Now, what's also further exacerbating a bit of a net demand, which I'll go through in just a second, is that people are choosing to get married later and are choosing to have children later. And what that's affecting is the number of people per household. So what we've actually seen is that, for example, in 1961, you had the percentage of households that were a lone person household was 1 in 10. In the 2011 census, that had changed to 1 in 4. So 25% of Australian households only have one person in them versus 50 years ago. By 2030, that's meant to get even more different, and that's meant to be 1 in 3. And what that does is it puts increased demand on apartments because more people who are in lone households tend to reside in apartments. So not only do you have a greater population, but you also have more and more people living in apartments. Next, I'll show what the effect is of the population against the ability to get apartment projects and land development projects approved from council. So you'll see by this graph, and it's a little bit of an eyeful, essentially you'll see there the underlying demand figure, that blue dotted line, is ticking along at about 43,000 dwellings required each year to meet the growing population. Against that, you'll see the number of completions. As you can see, it's only gotten worse from a completion ratio to demand. The difference between these two is what's called a net shortage. And as you can see by the blue graph, the net shortage has actually increased, and that's a cumulative figure. So that, and this is from the ABS. The Australian Bureau of Statistics currently thinks that there is a shortage of around 170 to 180,000 dwellings in the market. Now, in this next graph, I'll show, which everyone is always interested in, that Sydney dwelling prices. And you'll see here in 2003 to 2012-13, there's been a rather small increase in the median price. And that's gone up about 15% over 10 years. So it's about 1.5% per year. From our perspective, that shows that there's more upside in house prices than there is downside, regardless of whether or not you think that house prices are going to go up this month or next, we do see quite a bit of upside in that part of the market. Now, a little bit about the specific investment opportunity that we have. It's in Bondi Junction, which, as you know, is, in a sense, for the wealthier part of the eastern suburbs, is really the hub there, with Westfield and the train station and its proximity to Bondi Beach. What we are proposing is a 20-story apartment project with 90 apartments and 171 square meters of ground floor retail. We optioned this site 12 months ago and have been working over the last 12 months to get the development approval from Waverly Council, which we expect to get next month in April. Bondi Junction, from the perspective of having a site there, is high in demand. There are a number of young professionals, families, downsizers, and students who wish to live in this part of the market. Now, the difficult part in this is that there are a real lack of sites in this market. As you may have driven up there, most of the market is filled with buildings, and Waverly Council is very tough to get an approval from. So over the last several years, there's been almost no development in Bondi Junction. Two projects of recent, the Aria and Forum, have both sold extremely well, with the Forum of 200 apartments having only a handful of apartments remaining just as they finish construction. So here you can see we flew a balloon up to look at the views from our building. And as you can see, this is level 18, looking out towards the harbor, looking west towards Bondi Beach and the Sydney CBD. So they're quite expansive, beautiful views from the proposed project. Now, in terms of the actual investment, the investment trust, LegPro 15, its sole purpose is to provide investment to LegPro 14, which is the ownership trust. What we're offering is 3 preferential units at $400,000 each, as we're looking to raise a minimum of $1.2 million. And we will be co-investing at least 25% of that. What we're targeting as a return is a 20% per annum return. And we believe that you will have your capital returned and profit in 2 years, as your money is not actually being called until after we have the development approval. We have our development approval in April, as I'll show in just a second in the program. I might just flip to that right here. Development approval in April. We'll be pre-selling between May and September, settling in the 30th of September, and have a 20-month construction schedule with settlements forecast for June through September 2015. In terms of the financial summary, I'll be quick on this because I'm running out of time. Essentially, the equity that we are looking to raise, 1.6, is comprised of 1.2 from investors like yourself, plus the 400,000 from us. And then we will be engaging with an institutional provider for approximately 14.4 million. Plus the senior debt gives you a total of 63.4. On the bottom, you can see the uses of capital being acquisition, statutory costs, development costs, and interest. Just a quick bit about legacy property. We are residential in nature. We only develop residential projects, and those are apartments and land. We started the company 4 years ago, and over the last 4 years, we've grown to a team of 11 and are currently delivering in excess of 1,400 dwellings. Half of those, about 700, are apartments, and about half are land subdivision, which we focus on in the Northwest Growth Center. Over this time, we've established ourselves as a reliable, profitable, mid-tier developer with long-lasting great relationships with consultants, agents, banks, and financiers. One of our hallmarks is that we're nimble and well-capitalized. We've been able to raise in excess of $50 million from a number of parties over the last 2.5 years. Here's a selection of a few of our projects. On the left is Montrose. We are currently demolishing the site on the Pacific Highway as we speak. And on this project, we've sold 79 of 104 apartments in the first 4.5 months. In the center is St. Leonard's, another project of ours that we're working on. We have DA approval. We're currently working with North Sydney Council to improve the outcome on that. And finally, Corral Gardens on the right is a project in Ryde. It's a large project, 425 to 450 million, 450 apartments. We've currently raised 25 million on that. So just finally, thank you very much for having us. We'd like to leave you with this. Legacy Property has a high quality, very capable team. able to deliver outsized results and profitable outcomes for our investors. We're delighted to meet with you at our office and look forward to speaking with you. Thanks.